Are you sick of paying too much in taxes? Well, I have a treat for you today. I am going to be talking about 8 different topics that you can do in the next 2 weeks before year end to help you potentially save on your taxes. I want to tell you just a little story. I grew up watching my parents struggle financially. So it is my mission to be able to help as many small business owners as possible to be able to navigate that complex tax code and use it to their advantage. And this is what today's meeting is on. If you can start understanding the tax code or know people who do understand the tax code, we can help save you money on taxes. And then that money that you're saving on taxes by not paying Uncle Sam, we can go ahead and start using that money to put into your retirement account for that you can actually retire sometime in this lifetime and enjoy life. You can start building a legacy, or start funding your kids' college funds or their Roths or whatever. And like, I'd rather that money be used for you and for your goals than to be sending Uncle Sam. So that's why I do these videos. That's why I'm so passionate about helping small business owners. So let's get on to year end. I want to talk with you about 8 different topics. The 8 topics: we're going to establish your payroll level for 2024. We're going to pay the kids over 18 or under 18. We might be buying a vehicle before 12/31. We're going to talk about purchasing equipment, doing a Roth conversion, shifting your income and expenses, charitable contributions, and then getting your books in order as soon as possible. So I have a payroll matrix that I'm going to go ahead and share with you. But how we use this is if you are an S Corp and you are taking draws from your company, you are supposed to be taking a reasonable compensation in W-2 income. So the very first thing that we have to do is say that you took $200,000 worth of draws. And if you use this payroll matrix, the bottom line is how much money you're taking in draws. So then you go to the left and that's your percentage. So if you took $200,000, you should pay yourself 35% in payroll. So that would be a $70,000 W-2. So this is all the time people ask you, what's your reasonable compensation? Well, this is kind of a really good matrix to use in order to figure out what your payroll should be. That's kind of, I don't want to say audit proof, but it will keep you in line and it won't be any red flags for an audit. So that's the first thing, is make sure that you've paid yourself enough, or if you paid yourself too much, don't go ahead and pay yourself a bonus or whatever. Take it all as a draw from your company instead of paying it as payroll. So the next one is paying your kids if they are under 18. So you can pay your kids up to $14,600, which is the standard deduction for 2024, and you won't have to pay any Social Security or FICA taxes on them. That is only if you are a sole prop or an LLC. You can pay them directly from the company. If you have an S Corp, what you need to do is you need to go ahead and say you're married. So you yourself have an S Corp, you're paying yourself out of the S Corp, but your spouse is not in the company and is not an owner in the company. So what you can do is your spouse will open up a family management company, and the family management company is going to invoice your S Corp for the amount that you need to pay the kids. You can pay them more than the $14,600 if you want to, and you have that sitting in your as extra cash in your business account, but they're going to get taxed on it if it's over that $14,600. So if you can keep it under there, they don't even have to do a tax return. So then you're going to invoice your S Corp. Your S Corp is going to pay the family management company, and then the family management company is going to pay the kids under 18. You don't need to do a 1099. You do need to have them fill out a W-9 like you would if you were going to hire anyone. You do need to have, they do need to be actually working in your company. You need to have timesheets for them and what they did that's reasonable for the dollar amounts that you're paying them. So that is how, if you have an S Corp, that you can go ahead and pay your children and still pay no FICA. So 14,600 times 15.2%. I just went ahead and saved you $2,219 in FICA taxes that you do not have to pay. And also whatever tax bracket you're in. So say if you're in the 22% tax bracket and your kids are in the 0% tax bracket and you paid them 14,600 times 22%. If you're in the 22% tax bracket, you just save $3,212 by paying your kids, and then have your kids pay for their expenses instead of you paying for it. This is a great way to, I don't want to call it launder money, but this is a great way to kind of launder money. This is the number one thing that you can do. You're going to be paying for all that stuff anyways, but the key is that your kid, it has to be transferred to your kid's bank account, and then your kid has to be paying for all those items that you would normally pay for. Your kid has earned income now because you just paid them up to $14,600. Now, what I want you to do is open up a Roth IRA for them. This is the best gift that you can give your kid. So your child or yourself can put up to $7,000 into the Roth IRA in 2024. You have until April 15th or when you do your tax return to fund your 2024 Roth IRA, but go ahead and get it open. That's another tip for this year. So if we have this holding company, the holding company must be owned by the other spouse, and it must be a parent in order to pay the child. That's how you save on the FICA. Okay, so now if your child is over 18, or you're paying other family members over 18, you're going to have them fill out a W-9. You will 1099 them. You will send them a 1099 at the end of the year, and they're going to pay FICA taxes no matter what. Or if they're an employee, put them on as payroll and do a W-2, and that way you're paying for the payroll taxes out of the company, half of it, right? And then the other half gets taken out of their paycheck. So either pay them as a 1099 subcontractor or pay them as a W-2 employee. They're over 18. You have to send them that document anyways. It doesn't matter if it's an S Corp, an LLC, partnership, sole prop. It doesn't matter what it is if the kids are over 18. So item number 3, if you are thinking about buying a vehicle and you have money to do it, now might be the time to do it. Get it bought and get it in service. That's the key. Get it in service before the end of the year if you need one anyways. What you get to do is take bonus depreciation and the basic depreciation increases. So in the past, 95% of small business owners just used to take mileage on their vehicles. And I can't remember what this year's rate is. I think it's like 67.5 cents per mile that you can take. But if you take miles, it includes depreciation on your vehicle. It includes fuel to gas up your vehicle, and it includes repairs and maintenance. Like, it's supposed to include all of that. Or you can take and buy the vehicle. And this year we get to depreciate 60% of the car pretty much immediately. So that is something to consider. So the next thing, item number 4, is if you need to buy any equipment for your business, make sure that you get it before the end of the year. Even if you have to put on your credit card, you can't pay for it this year, put on your credit card. Like, if you know that you're going to have to pay a lot of money in taxes, it's basically, you need to look at your net income of your business. If you have a net income, you're paying, that gets added to your wages. Like, that gets added to what you pay in federal income taxes for the year. So if you have a net income and you need to buy equipment or buy that vehicle, go ahead and consider doing that this year. The bonus depreciation for 2024, first we'll take Section 179. If you have net income, we can take Section 179, and then we can bonus depreciate it up to 60% for 2024. If you have a net loss in your business, don't be purchasing equipment this year, or don't be purchasing that vehicle this year. Like, look at your profit and loss to figure out if you need more write-offs for the year. Okay, item number 5. I talked about this a little bit earlier with the kids and paying the family members. One, if you don't have a Roth IRA open, go ahead and open up that Roth IRA. I have done many videos on this in the past on Roths. I 100% believe you should have a Roth IRA and you should be fully funding it every single year. Get rid of the traditional. There is an issue if you are over the MAGI limits, the modified adjusted gross income limits. You cannot put it into your Roth immediately. You have to put it into your traditional and then put it into your Roth. But this has to be done this year. So if you have any money in your traditional, go ahead and convert it to the Roth. It's called the backdoor Roth, and this may be the last year for a backdoor Roth. Congress has been trying to get rid of this for years now. I'm hoping with the Trump administration, they will keep this and this will not go away, because I want all my clients to have all of their retirement money into a Roth IRA. That means whatever you put in now, you're going to pay taxes on it. There's no tax benefit for it now, but you probably have the money to pay the extra tax on it. Pay it now, and then let that investment grow. And if you can do self-directed, do self-directed. You might have better returns than the S&P and the stock market, right? But let it keep on growing, growing, growing. And then when you take that money out, when you go to retire at 59 and a half, it's completely tax-free. So if you have any money in a traditional, take a look at your tax bracket to figure out how much more you have to get to the next tax bracket jump. So say if you're in the 24% tax bracket, I think the next one is a 35. Like, I mean, are you 100,000 away? Are you 20,000 away? Like, how close are you to hitting the next tax bracket? Figure that out and then convert as much as you can. It's called chunking. Convert as much as you can until you reach the next tax bracket, or, until you think you're going to hit the next tax bracket, and then do the backdoor Roth and do that by December 31st. All right. Item number 6. This is shift your income and expenses. So again, you need to have bookkeeping done in order to do this. So be looking at your profit and loss, seeing where you're at. And one, do you need to prepay any bills? Do you have any expenses that you can prepay by 12/31 that maybe not due until January or February? Go ahead and prepay them if you need more expenses for the year. Item number 2. I'm in Texas, so we don't have any state or local income tax. But if you are in a state that has that, you can go ahead and pay any state or local taxes that you might need to by 10/31 or 12/31. Item number 3 of this section is look at income expectations for this year and next year, for 2024 and for 2025. Like, do you have any income that's coming in by the end of the year? What does it look like for next year? Figure out, okay, if you're getting a check in the mail, do we cash it right away or do we wait for next year? So if you can kind of look at that, and if you know where you're at this year, like if you know this year is going to be a really, really high year regardless, and next year might be a slow year, then go ahead and deposit that on January 2nd next year and let it be next year's income, especially if you're cash basis, right? If you're accrual basis, that's different. And if you don't know what I'm talking about, you're probably cash basis, and whatever you get and put into the bank this year counts as income, and whatever you pay this year counts as expenses. And then if you're farmers, like if you're in the farming industry, go ahead. Like, is there any feed that you need to buy? If there's any seed or fertilizer, any things like that that you need to buy that you can buy this year, that instead of putting into next year as an expense. Item number 7, we're getting really close. Charitable contributions. So this is for non-cash items. So you do not need a receipt for any non-cash items that are under $250. Okay. If it's a non-cash donation over $500, you need to fill out a form 8283 with your tax return. And guess what? You need to have the receipt from the charitable nonprofit that you're giving the items to. If you're going to donate a car, a boat, or even a plane, some of you might have that, go ahead. That needs to be documented on a form 1098-C. And they need to be able to give you an appraisal of how much that is or how much they received for it. But you need that from your nonprofit that you're donating that to in order for that to be able to be written off on your tax return. Just for you know that. And then if you are a very giving person and you are going to go do charity work, or even if your kid is in one of those nonprofit organizations like scouting or 4-H, you can write off your miles of driving back and forth to those meetings. Like say, for instance, my son is in Boy Scouts. My husband's one of the leaders for Boy Scouts. So if my husband was doing a good job at keeping track of the round trip miles every Monday that he goes to the scouting events, or even if they're going on campouts or whatever, if he were keeping track of those miles, or if I wanted to take the time to go ahead and be like, okay, every Monday, I don't know, it was 14 miles back and forth. I can go ahead and calculate that. And that is also on the Schedule A of your tax return, where we can write off the miles that we're donating. So keep that in mind because that may add up. I know it's a lot less than the 67.5 cents per mile. It's, I don't know, like 16 cents a mile or maybe 14 cents a mile, but it still adds up and you're getting a write off for it. Next, charitable contributions, cash or stock. Okay, so if you want to give money to your favorite charity by the end of the year and say you don't have the cash to give, you can put it on the credit card. It has to be sent in by 12/31. They're supposed to send it to you by January 31st of your donations for the entire year. If you don't get it, make sure you call and ask for it, because if you do get audited, the IRS agent's going to ask for that. So make sure you have that in hand from the nonprofit that you're donating to. All right. Does anyone have any extra stock laying around that's really appreciated, or maybe it's depreciating, you just don't want it anymore, but you want to get a tax write-off for it? So this is what you can do. You can call up your favorite charity, be like, hey, I have, I don't know, Apple stock that I want to donate to you. Especially if it's really appreciated and you're trying to find write-offs and you don't necessarily need it, you can go ahead and donate that stock to them. They'll be like, sure, I will get you my brokerage number, and then you transfer it to them. And then you get the stepped up basis. So say you bought Apple stock. I don't know how much Apple stock is going for, so I apologize. But say you bought it for $20 a share and it's worth $100 a share now, and you bought 100 of them, you would get to depreciate that whole 100 times 100, whatever that is. And that would be your tax write-off for the year instead of the $20 at 100. So that's something for you to keep in mind in case. I know like some people completely forget that they have stock, and then they're like, I'm like, holy cow, if I take that out, I'm going to have huge capital gains. Well, instead of paying those huge capital gains and you want to donate it to charity, go ahead and do that instead. And you don't have to donate all of it. You can donate some of it. And then you get that stepped up basis of what it's actually worth today, or when you transfer it to them. That's what will count as your tax donation, your charity contribution. Okay, the third one is the last one for this charitable contributions is if you have to take a required minimum distribution, an RMD, you can actually go ahead, like if you have to take an RMD and you don't want to, you can go ahead and call up again at your favorite charity, be like, hey, I have to take an RMD. You can go ahead and give it to them, and then that will count. You won't have to pay taxes on it because you're giving it to your charity instead. So ask them for the correct way to do that in order to get that done and for it to count. All right, the very last item to help you with tax planning for the year, and it probably should have been first because I kept on talking and referencing it a lot of times, but it was get your books in order as soon as possible. So I sure hope that you're doing your books. Have your profit and loss. If it's in QuickBooks, go in, make sure everything's up to date, do all those bank transactions, get it up to date, and run your profit and loss so that you can have a quick profit and loss estimate. Or if you're doing it old school on a spreadsheet, update that spreadsheet so that you know, okay, here's all my income, here's my expenses. And it would really help if it's by category. So category means supplies, payroll, taxes, what are other things that people buy? Cost of goods sold, a fixed asset. So go ahead and organize that spreadsheet and get that caught up. And that way that will save, if you're sending that to your tax preparer, it will save them in time of doing that for you. If you do your own 1099s and W-2s, go ahead and prepare for that. We have been doing an audit for our clients, all of our bookkeeping clients, of you paid someone as a contract labor, it's over $600 or more. Where's the W-9? Like, we need the W-9 so that we can send them a 1099. 1099s and W-2s are due by January 31st for this year. Make sure the W-2s, make sure that if they're not working for you anymore, the employees, or if the employees have moved, make sure you get an updated address. That way it gets mailed to the correct spot. Just saying, it really helps. And that way they're not calling you back in like February or March or October being like, I never got that W-2 from you. Well, if you had the correct address, you know it's going to the correct place. And then for my crypto people, if you are buying and selling crypto on a brokerage or like in your wallet and it's not through your Roth IRA or your traditional IRA, you need to be keeping track of every time you buy and sell crypto. And I highly recommend that you get a software, an app on your phone that'll keep track of that, because your tax person needs that in order to do your taxes correctly for you. I can't remember any apps off the top of my head, but if you need that information, I can go ahead and look it up, or go ahead and Google it yourself and see what the apps are that will keep track of your crypto trades, because it's very, very important that we have the correct numbers every time you buy and sell crypto. All right. That was 8 ideas that you could possibly get done by the end of the year. I hope that this was helpful. You got this. I just for I am a Main Street certified tax advisor with Mark J. Kohler. So I get all of my training and ideas on these topics from him. And I just love doing this. I love helping you. I do not have any time, one-on-one time, to be able to help any advisory clients through the end of the year, or new potential advisory clients. But if you are interested in this, I am already booking into January for advisory clients. You can go ahead and call the office, talk to Liz, and schedule that discovery call appointment. I will go ahead and put the discovery link. You can automatically book the calendar, can get Liz a lot quicker than you can get me, and she can talk with you to figure out if you would be a good fit for a more comprehensive consult, because these are just 8 ideas. There's like over 70 different things that we can do to help you save on taxes. And we can really narrow down like how much money we can save you individually. Everyone is tailored, everyone is different. It depends on your family, your situation, your businesses, if you have rentals, if you have crypto, if you're in debt, if you have high medical. Like, every single client is different, and we customize these to you. We create you a customized action list and a trifecta. A trifecta is a picture of where you are now on paper, and then we, based off of where you want to be, like where you want to be, we create a future trifecta. And then the action list is based off of how to get you from here to here. So if this was of interest to you, go ahead and get that discovery call booked. And please go ahead and subscribe to this. I do these videos every Tuesday. And if you subscribe and click the notifications, you'll be the first to hear about it. And then we push it out to our social media sites later and email our clientele later. But you'll be the first to hear about it if you go ahead, subscribe, and share this if this was helpful. Thank you and have a great Merry Christmas.